Hello everyone, welcome back to my channel. Today, we're diving into a topic that's crucial for anyone starting their journey in the financial markets: trading versus investing. As we set off on this journey, it's essential to understand these two different approaches to the financial marketplace. Are you a trader, keen on capitalizing on short-term market fluctuations, or an investor, eyeing long-term growth and stability? These are questions we'll unravel today, in an attempt to help you determine which path aligns best with your financial goals and risk tolerance. We'll break down the basics, dissect the differences, and delve into the pros and cons of both trading and investing. This is an exciting journey, and whether you're a newbie or just curious about the financial markets, there's something for you here. So, let's get started. Firstly, let's clarify what trading and investing actually mean. Trading, in the simplest terms, is like a sprint. It's about buying and selling assets, stocks, bonds, commodities, you name it, with a focus on making short-term profits. These profits are generally realized within a short time frame, which could span from a single day to several months. It's fast-paced, and it requires a keen eye for market trends and a knack for timing. Now, investing, on the other hand, is more like a marathon. It's a long-term game. Instead of aiming for quick profits, investing involves buying assets with the intention of holding on to them for a significant period of time. We're talking years, even decades here. The goal is to let these assets grow in value over time, reaping the benefits of market appreciation and the power of compounding. So we've got two different races here: the sprint that is trading and the marathon that is investing. Both are run on the same track, the financial market, but they require different strategies and mindsets. Now let's discuss which approach might be best for beginners. Is it better to lace up your sprinting shoes? Or is it wiser to gear up for a long-distance run? Let's explore this in the next scene. Trading can offer the allure of quick profits, but it also comes with higher risks due to market volatility and the need for constant monitoring. If you're someone who thrives on excitement, enjoys analyzing market trends, and has the time to keep a close eye on your investments, then trading might be the path for you. However, it's essential to understand that trading is not a get-rich-quick scheme. It requires a significant commitment to learning, understanding, and mastering various strategies and techniques. This includes familiarizing yourself with technical analysis, which involves studying price patterns, trading volumes, and other market indicators to predict future price movements. Moreover, successful trading requires a solid grasp of market trends. This involves understanding the broader economic factors that impact the financial markets, including interest rates, economic growth, and geopolitical events. It's about staying informed, being adaptable, and learning to anticipate market movements. Risk management is another crucial aspect of trading. This means setting limits on how much you're willing to lose on a single trade and sticking to these limits. It also involves diversifying your portfolio to spread risk and potentially increase returns. Remember, even the most successful traders lose money on some trades. The key is to ensure your gains outweigh your losses over time. But let's be clear, trading is not for everyone. It can be stressful, time-consuming, and at times, downright frustrating. It requires discipline, patience, and a certain level of emotional detachment. If the thought of constantly monitoring the markets makes you uneasy, or if you're looking for a more passive approach to wealth accumulation, then trading might not be your best option. However, if you prefer a more hands-off approach and are in it for the long haul, investing might be the better choice. Investing allows you to take advantage of market growth over time, and it generally requires less active management compared to trading. We'll dive into the specifics of investing in the next segment, so stay tuned. Investing, on the other hand, is generally considered less risky and more suitable for beginners. Why is this? Well, investing is a marathon, not a sprint. It's about buying and holding assets for the long term and allowing them to grow over time. This approach is based on the belief that, despite short-term market fluctuations, the value of good quality assets will increase over a long period. One of the key benefits of investing is the power of compounding. Albert Einstein famously called compound interest the eighth wonder of the world. And for a good reason. Compounding allows your earnings to generate even more earnings. You receive interest not only on your original investments, but also on any interest, dividends, and capital gains that accumulate. So, your money can grow faster over time, and even small amounts can add up. Another advantage of investing is market appreciation. Over the long term, markets have generally shown a trend of rising in value. So, if you're patient and willing to ride out market downturns, you could potentially reap significant rewards. However, investing is not without its drawbacks. It requires patience, discipline, and a long-term view. The returns are not immediate, and there can be periods of market downturns or even crashes. But if you're in it for the long haul and not looking for quick profits, these short-term fluctuations shouldn't alarm you too much. So, which one should beginners choose? Well, it ultimately depends on your individual goals, risk tolerance, and time commitment. If you're attracted to the potential of quick profits and are willing to accept higher risk, trading might be for you. However, if you prefer a more hands-off approach, are willing to wait for your investments to grow over time, and have a lower risk tolerance, then investing could be your better option. Remember, whether you choose to trade or invest, the key is to make informed decisions. Take the time to educate yourself, understand your financial goals, and carefully consider your risk tolerance. With the right approach, both trading and investing can be rewarding journeys in the financial markets. In conclusion, trading and investing are two distinct approaches to the financial markets, each with its own set of risks and rewards. We've spent some time today unraveling the differences between these two strategies, and hopefully, you now have a clearer understanding of what they entail. Trading, with its focus on short-term profits, can be thrilling and potentially lucrative. It's a dynamic world that rewards those who are willing to keep a close eye on market trends and make swift, informed decisions. But remember, it also carries a higher level of risk and requires a significant investment of time and energy. On the flip side, investing is the art of playing the long game. It's about patiently waiting for your assets to grow over time, harnessing the power of compounding and market appreciation. It's generally considered less risky, particularly for beginners, and doesn't require the constant monitoring that trading does, but it does call for discipline, patience, and a tolerance for the inevitable ups and downs of the market. As you embark on your journey into the financial markets, it's crucial to take the time to educate yourself. Arm yourself with knowledge about the different types of assets, the factors that influence their prices, and the strategies you can use to maximize your returns. And of course, it's vitally important to assess your personal goals and risk tolerance. Are you looking for quick profits, or are you aiming for long-term growth? How much risk are you comfortable taking on? Your answers to these questions will help guide your decision between trading and investing. Remember, there's no one-size-fits-all solution. Whether trading or investing is right for you depends on your individual circumstances, your financial goals, and your personal comfort level with risk. In the end, the most important thing is to choose a path that aligns with your objectives and to approach it with a clear, informed strategy. The world of finance can be complex and intimidating, but with the right knowledge and mindset, it can also be incredibly rewarding. I hope you found this video helpful. If you did, don't forget to like, share, and subscribe for more content. Until next time, happy investing.